Hi everybody, and Happy New Year. Hopefully 2015 will be great for everybody, especially as far as trading is concerned. This is the first video for 2015, so it's going to be a bit long, and I'm going to do it in different ways. I'm going to do it starting with the monthly chart, then going down to the weekly, then daily, or actually weekly and daily together, and then we'll have a good idea what's going on for January. What is the situation? What is the situation now? This is the euro dollar chart, the monthly euro dollar chart, and it's actually uh, interesting to study because a lot of things has been going on. One of the main things is that it has been pretty much going down quite a bit, and is now at a very strong level. So I'm trying to draw and see a little bit what has happened in chart configuration, and maybe some of the things that we can look out for the long term. So the first thing is I'm going to do an arrow, and this is what the euro has been doing since the year 2000. It has been going up pretty much steadily and has had a high in about 5 1.55, and then basically it does something like that, which is a exactly where it is now. It is doing a triangle or a pennant or flag, whatever, on a chart configuration. So the theory behind a flag is that it's a continuation pattern. So normally the currency should go back up, do something like this, and break back up. That is the theory behind that. Though the thing is that um, the other side of the theory is that it should break or reverse about 3/4 inside. So normally we should see from this level, following that theory, we should see a move back up to the upside to break that high, which is quite high. What's going on right now in the news is that Greece is threatening to exit the eurozone, which in this case makes the market a bit leery as far as the euro is concerned, and this is why we've seen a lot of volatility and also having the euro going down. One thing that we need to keep in mind is that the price is at close to being at the 1.18 figure, 1.8 1800 we call it, and that level is significant in its support. It's a very strong level of support, and this is where the currency is right now. So um, very much likely that the currency is going to see a lot of support there, and we may expect it to retrace from that level, or at least not go down so quickly. It touched it here, 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 acted as a resistance. Same here, and if we look at the weekly as we do earlier, we'll do later, actually show that that level is extremely strong. So before breaking it down significantly, it would be better to see a retracement back up before a breakdown. So if the currency breaks down right away without any sort of retracement, I think that it might be a weak weak breakdown, and that it's not going to be very substantial, and it could just be a false breakdown before going back up. So the way healthier way would be for the currency to go back up and then break the 1800. If that happens, I think that the 1800 break would be a lot stronger than if it just does it right now. So let's go back to the chart, and what we'll do is that we'll draw a line here that would actually show that level of support, which is pretty much where the price is right now, very close to it. Okay, so that's that line. We need to look at it throughout the week, because I think that it's going to be quite important. Retracement on the monthly, for a breakdown we could look at 900 to 1200 pip retracement for it before it goes get down. Probably, I would say probably about a thousand pip up. If it goes back 1,000 pip up and then reverse down, it would be quite a sign that the currency is ready to go down, or to break that 1800 level. Okay, so that's it for the monthly. So we'll go to the weekly. When you look at the weekly, and you zoom out, it confirms what we were talking about, that basically that level is very, very strong. So if we go back here, we see that it acted here, here, this area a little bit, here as well, and here as well. The last time the currency was as low as it is today was in June 2010. So almost 5, well, about four and a half years. That's when it reached that level. And last time when it did it, it actually went down very quickly and went back up equally quickly. So we have to be careful what we do and how we analyze the market, because the monthly and weekly chart tells us that this level is critical. Okay, so if you look at a long-term trading at those levels, what you would want to do is be patient and wait for confirmation that the market is still going to come down and will actually break that level. There are no reversal pattern in the chart that will tell us that the market is ready to change the trend or its trend down. So we have to, if there is no reversal pattern, then we know that it may actually it should keep going down until it creates a reversal pattern. So if we look at the reversal pattern on a weekly chart, this is what could happen. As you can see right here, we have had a period of consolidation, broke down to get to that level. What could happen is that the market will go back up here to that level here, does the same level of consolidation, and would actually create at that point a head and shoulder. That would be coinciding with the trend dragon trend line arriving into that level. If the market does that, goes back up, does another consolidation period here, that would create a head and shoulder, or reversed head and shoulder. And if it breaks that level here, that would actually signify that it is ready to go back up, or to change the trend. Of course, this is not what happened, but you want to look at possibilities, and here we will be looking at well, about 800 pip up consolidation, and then it will go back up at least 800 pip as well. Okay, so on the weekly chart, this is, if there is a reversal pattern, this is how it would play out. Okay, now when we look at this, there is on the downside, the way that you would play that, there's same, basically the same as if it was on the daily. If he breaks down that 1800 and you want to play it when he breaks, once he breaks down, then you would enter at the break and then put your stop loss above 1800 to get a stop loss as tight as possible. If you want to trade on the weekly, it would be better to wait for it to break down, retrace to 1800, creating a lower high, confirming the break, while also confirming that 1800 now is a strong support, and then enter at that potential new lower low that has been created at the break of that level, or enter when it start to reverse back down. Those are basically the three options that you would have to do that. Those would be, of course, trading on the weekly chart would be trades that would you would risk a couple hundred pip on that on those trades. So the same strategy would apply on the daily and also on the daily chart, and also on the hourly chart. But trading on the daily and hourly chart give us a little bit better or tighter trades with lower stop losses or lower risk. So the next video we'll talk about the daily and hourly chart and what you could do with that. Also, Trend Dragon would be a bit give us a bit more lines on it, so it might be actually be easier for us to do that. So I'll see you on the second video that will talk about the daily and hourly chart and entry at that level.